Bitcoin hit 120K last week. Will it go up to 250,000? Is it realistically possible? These are the questions many investors are asking right now. In this video, we'll break down 3 powerful reasons why Bitcoin could hit $250,000 this year. Before getting into the video, we have an exciting offer if you're a new user on Mudrex. Make your first deposit of 1000 rupees or more and receive 100 rupees worth of Bitcoin in your Mudrex account absolutely free. Now let's discuss why many analysts believe that BTC can reach this milestone by this year. Is it going to happen? Let's break it down. Reason 1. Post-Halving supply dynamics. Now what is this? Let's break it down. Bitcoin supply is limited, and every 4 years the amount of new Bitcoin entering the market is cut in half, a process called the halving. The latest halving in April 2024 reduced miner rewards from 6.25 to 3.125 BTC, instantly slowing down new supply. When supply shrinks but demand grows, prices tend to rise due to scarcity. Historically, each halving has triggered major bull runs. Let's have a look. After 2012, Bitcoin rose nearly 9,000%. After 2016, around 2,800%. Post 2020, about 700%. If this trend continues, the 2024 halving could set the stage for Bitcoin to reach $250,000 in 2025. Of course, past performance doesn't guarantee future results, which brings us to reason number 2. Reason 2. Institutional and sovereign adoption with regulatory support. Institutional investors and countries are increasingly embracing Bitcoin, bringing huge new capital and legitimacy to the market. Institutional investors like BlackRock, Fidelity, and Grayscale have been leading the charge in bringing massive capital into Bitcoin through spot Bitcoin ETFs. Even if these big investors are allocating just 1 to 2% of their portfolios to Bitcoin, it would inject tens of billions of dollars into an asset with a capped supply of 21 million coins. But how does this massive capital injection cause Bitcoin's price to surge? Bitcoin has a fixed supply cap at 21 million coins. Unlike fiat currencies that can be printed endlessly, when billions of dollars flow into a limited supply asset, demand outpaces availability. This supply-demand imbalance creates upward pressure on price. So, we know big investors and countries are buying more Bitcoin, which can push prices up. But does Bitcoin have more room to grow with regard to its price? The best way to understand this is by looking at data from the Bitcoin network itself. And that brings us to reason 3. Reason 3. On-chain metrics show Bitcoin is still undervalued. If you study the Bitcoin blockchain, you can find important data that shows how investors are behaving and what the market might do next. One key number to watch is the MVRV Z-Score. Experienced traders rely on the MVRV Z-Score to decide when to buy or sell Bitcoin. MVRV stands for market value to realized value. This is the ratio of total value of all the Bitcoins at today's price, i.e. market cap, to total value of Bitcoin calculated by counting the price at which each coin was last moved. Z-score is a statistical term that measures how far a value is from its average in terms of standard deviations. You see, when the score is high, it suggests Bitcoin could be overvalued, indicating it might be a good time to take some profits or sell. To understand this better, let's look at this graph that breaks down the key components behind the MVRV Z-score. The black line shows Bitcoin's market cap, the total value of all Bitcoins at current prices. The blue line shows the realized cap, the value based on the price each Bitcoin was last moved or purchased. The difference between these two lines, market cap and realized cap, helps us understand whether Bitcoin is overvalued or undervalued. Now, when the market cap, black line, is much higher than the realized cap, which is the blue line, it usually means prices are high compared to what investors paid, often a sign of overvaluation. But when the market cap is closer to the realized cap, it suggests prices are more reasonable or undervalued. Now, looking at the current graph, we see the market cap and realized cap are closer than at previous peaks, and the MVRV Z-score, which is the orange line, is relatively low compared to historical highs. This suggests Bitcoin is not too expensive yet. Bitcoin seems to have the potential to grow higher in value. All these factors together make a strong case for Bitcoin's long-term potential as it continues to gain strength and adoption worldwide. While $250,000 in 2025 is possible, it's not guaranteed because crypto markets are volatile and prices can move unpredictably. Your best move? Stay informed, keep researching, and see how Bitcoin fits into your own investment strategy. See you in the next video.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions. For any queries, contact us at help@mudrex.com.